Hey, what's going on, guys? Wanted to make a quick follow-up video regarding the 5 consumer-based stocks that I mentioned in a couple of videos ago. Just talking about how you can create a monthly dividend portfolio. By all means, I don't recommend investing in these 5 stocks. These are all consumer based stocks. I definitely recommend, definitely being more diverse, not just investing into one industry per se. But this is just for illustration purposes. This is the picture that I'm referring to. So you could see, based upon just investing in these 5 stocks, you will get dividends every single month. They won't be consistent, because like I mentioned before, one month has one dividend payer, the next month has two, next one has one, next one has two, and then so on there. So you could add in some other payers, some monthly payers if you'd like, some real estate, some businesses, some W-2 income, whatever it may be. This is just for illustration purposes. So I just wanted to show you guys kind of what it might look like. Now, obviously, once again, as far as allocating, how much you want to invest in each determines how bullish you are and what type of allocation you might want. So if you want a higher yield, you might want to put more of an allocation towards Coke because it has a higher yield here. But if you want more of like a dividend growth, you might put more focus on Lowe's, McDonald's, and Starbucks, or whatever allocation you set it for. There's so many different ways to do that. So don't just look at this and blindly invest evenly throughout. You can do that if you want, but this is not investment advice. But as you can see here, investing $100,000 is going to get you around $2,000 in annual dividends. So not a huge amount there, but these stocks are they're pretty healthy as far as their growth goes. They're smaller yielding stocks, but um, they are growing pretty well as well. um, so do keep that in mind. This is more of like a dividend growth play. This is a web app I made. I haven't implemented like dividend growth statistics yet, but that is something I'm looking into adding. But like I mentioned earlier, a lot of these stocks are dividend growth. Coke is not necessarily um, huge dividend grower, but they are a consistent payer with a higher yield there. Um, Still does have some growth, but not anything like the others. But yeah, so just investing $100,000 into this portfolio. Obviously, this is scalable. You invest $1,000, invest $10,000, whatever you would like or enable to invest. This is the same for the others as far as allocation goes. But with that being said, you're going to get $565 a year from Coke, $428 from Starbucks, $282 from Lowe's, $320 from Walmart, and $467 from McDonald's. So going back to this picture here, Walmart is going to be our first month. So you'll get a fourth of this because Walmart is a quarterly paying stock. So under $100 there for the month of January. February is Lowe's and Starbucks. So you obviously divide these by 4 and add them together. That would give you your monthly income there. So you're looking at 282 divided by 4 is $70, and then Starbucks is 428 divided by 4. So you're looking at 180 dollars a month for those months. So 180, 180, 180, and that's a little different there. But as you can see here, that's just kind of I just kind of wanted to go over that breakdown of what that might look like. Definitely go check out this web app I made. It's optionslogger.com. Like I had mentioned, it's mainly for you know, a big part of it is option investing, different covered calls, um, different vertical spreads, stuff like that. So if you're into that space, definitely feel free to use this web app for that. But another cool thing that I implemented, like if you sell cash secured puts or if you sell covered calls, essentially that is lowering your cost basis. Likewise with dividends, whenever you get a dividend, that's lowering your total cost. But the way I program this web app, it's actually going to lower your um, cost basis with the covered calls and cash secured puts as well. So let's just go ahead and do one here so you guys can see it. So you have to have 100 shares to do covered calls. So let's do one on Coke. Covered call, say for Coke, say we're saying this is just an example, and then say we're selling it this Friday and we're getting $25 of credit. Let's just go ahead and close that for a 0 debit. And then we also could do one on Starbucks. Okay, so then if we come back to this page and click on include covered calls, you can see that we have now lowered our cost basis on both of these positions here. So pretty cool. That's why I'm a huge fan of covered calls and cash secured puts. It's just another way to leverage your current portfolio. So in this instance with Starbucks having 200 shares, 200 shares there, we could sell two covered calls, per week or however many we want to sell, whether it's monthly, quarterly, weekly. So you can do two of them because you have 200 shares. Walmart, you have 143, so you can only do one of those. And then Coke, you have 300 shares, so you could do three contracts per week. So just some additional information to keep in mind. Dividends are great. Investing in stocks that go up are great. Obviously, there are risks with covered calls. You are capping your upside. So please do understand your risk of that. My plan is to, continue to do these types of options in my Roth IRA, just because, I'm lowering my cost basis. That's the ultimate goal. Getting my total cost down to zero as fast as possible so then I could deploy that capital into other investments. That's the first goal. And then just creating increasing that yield per year on that investment. So covered calls are great. You can leverage the position on a weekly or monthly basis like I had mentioned. All right, guys, that's it for this video. I just wanted to briefly, go in a little bit more depth of that, previous video about the 5 dividend stocks and how you can create a monthly income, with just those 5 stocks. Also adding in the covered call income that will help, increase your income for this portfolio as well. All right, guys, thanks for watching.